Well, welcome to the Transitions Lecture Series. I'm John Sullivan, Center for International Private Enterprise, and my task today is to very briefly welcome you and open up the session. You'll find bios out front on both our speaker, Carole Kariuki, and Peter Lewis, the moderator, so I'm not going to go through their extensive and illustrious backgrounds, except to note that Carole was elected by the Entrepreneurs Club, the most extraordinary woman in Kenya. I thought that was worth breaking the NED rule on bios for. But welcome to the role of economics and democratic transitions. Today our case study is Kenya. This event is part of a larger project on the role of economics and democratic transitions. It's the second in a series of case studies. The first was on Tunisia. Today we're having Kenya, and then later we'll have Burma. It's being organized in partnership. Do I pause? No, okay. It's being organized in partnership between the International Forum for Democratic Studies, the Legatum Institute, World Affairs, and Democracy Lab. And I'm also told that I will be subject to severe corporal punishment if I don't advise you that if you're on Twitter, you can follow this presentation and contribute to the conversation by using the hashtag NetEvents, one word, or following the forum at Think Democracy and the endowment at NED Democracy. And that's NED Democracy, all one word. Note, not two Ds. That tripped me up the first time I saw it. I'm new to social media, so and I don't know how many of you are, but I know there are several people out there will be tweeting, and you'll have plenty to tweet about because Carole and Peter were going to offer us a splendid introductions, an examination of Kenya, and Carole's organization, KEPSA, the Kenya Private Sector Alliance, truly is a remarkable organization that's doing some really fundamentally important work in a key African country. With that, I will turn it over to Carole.
Thank you very much, John, and good afternoon. I'm very excited to be here with you this afternoon. I hope everyone can hear me. And just to really speak briefly on the role of economics in democratic transitions and look at Kenya in particular. And it's really an example of many other countries and what's going on in African countries. And I'll start with a way of background, not assuming that we've all looked at democratic transitions as they're going around in the global sphere, but just very briefly, and then I'll look at Kenya and really focus on what the private sector has done as Kenya has been going through the democratic transition in the last about 20 years. Recently, we've witnessed a number of democratic transitions taking place globally and across Africa. Millions of people in countries once ruled by autocrats are struggling to realize freedom and shared opportunity. Other countries around the world, including a number of African countries, also teeter on the edge of political and democratic transitions to more free and open societies. It is clear that economic crises trigger political transitions, and we've been seeing a lot of that happening even in regions like the Middle East. Despite all the research into democratization, the factors that allow some democratic transitions to succeed while others stall or fail remains very poorly understood. Since the fall of the Berlin Wall, the relative importance of economic development and modernization, economic structure, equality, governance, and rule of law, and education have been debated. And I'll be looking very briefly at how has the transitions around the world affected the economy, or how the economic growth really affected democracy. We find that the promise of political freedoms raises people's expectations for economic and social opportunities. The success of emerging democracies depends fundamentally on whether political transition, democratization can deliver shared opportunity and inclusive growth to materially improve people's lives. In Africa, it's clear more procedural reforms, that is the freedom to vote, and marketplace participation has not always been enough to sustain democracies over the long term. Many sub-Saharan countries struggle to achieve sustained economic growth as the necessary basis for reducing poverty. But I'd like to pause there and say that in the recent past, in the last 10 years, most growth, economic growth in the world is being experienced in the developing countries and especially in Africa. And with that, you find that in terms of elections, there are more democratic regimes, or at least transitioning to democracy as as growth has happened. So there's a correlation in a lot of African countries in terms of as people have, the middle class has grown in Africa, that we are having more sustained democratic regimes. But let me look at how Kenya has moved for the last 20 years to where it is today, and also look at the case of the private sector. And Kenya is one among many countries in Africa, had the first multi-party election in 1992. But the governing political party then still maintained power until 2002, when it was ousted by an opposition coalition. And is that the first time that the people of Kenya felt that they had elected a government of their choice? But that did not last too long before we had a disputed election in 2007, and that triggered some ethnic violence, but also had a positive change, because that's when the push for a new constitution really took to the center stage. And by 2010, Kenya had its new constitution, and a different constitution from what it has had since independence in 1963, which is about 50 years ago. This constitution has two tiers of system. There is the national and the county. And this is seen by many Kenyans as one that will deliver not only the public service, but also economically. For the private sector, there is greater focus on facilitation and support of businesses to greater economic activity. And this is meant to see a shift in the economy as it is now. Briefly on the Kenyan economy, in the last 10 years, you find that when you look at the macroeconomic indicators, Kenya has had a positive trend on average, pointing to economic growth. The Kenya GDP was about 17.39 billion US dollars 8 years ago, and per capita GDP averaged more than 450 US dollars annually. The country's real GDP growth picked up 2.3% in 2004. But by 2005, 2006, it was growing to a rate about 6% to 7%. And that is very well correlated with what was happening on the political side. That is when we had the coalition government, the one that had been elected in 2002 in power, against when we had the ruling party for about 40 years. So you can again see the correlation between the economy and the politics of the day. Kenyan GDP is expected to continue to grow and improve, and it's largely driven by the sectors of tourism, telecommunications, transport, construction, and recovery in agriculture. Again, this growth is expected to double, at least to almost 10%. Right now, it's growing to about 4.5 to 5% when we start exploiting the new resources of oil and gas and the new minerals. There are a lot of new minerals that have been discovered every day, and also as Kenya becomes the hub not only of East Africa and Eastern and Central Africa, but the hub of Africa. For a long time, Kenya, most companies, when they thought about locating in Africa, South Africa was the entry point. But when you look at the map of Africa, and you think of how large Africa is, it fits 3 maps of the United States. So when you enter Africa through South Africa, to access the rest of Africa, it's a long journey. But where Kenya is placed, it's in the middle. It's becoming a country of choice for many investors who are looking at accessing the population, as the consumer population of Africa, as well as the resources of Africa, because of its central location. Again, because of its more developed telecommunication and transport system than the rest of its neighboring countries, a lot of companies and a lot of industries are setting base in Kenya. Again, that is going to continue to drive the economy of Kenya. But where has the private sector been when all these transitions have been happening? When all the political transitions have been happening, while the economy has been growing, what's the role of the private sector? The private sector has actually been at the center of it all, sometimes directly, sometimes indirectly. KEPSA, as John mentioned, was formed in 2003. It was actually a push by the government, and I'll be talking a little bit about that. But the private sector has continued to play a role in the formulation and implementation of pro-growth policies that promote Kenya's competitiveness and encourage domestic and foreign investments and pursue regional, continental, and international economic opportunities. This KEPSA has done by engaging government through different forums, the Presidential Working Forum, the Prime Minister. Before this government, we had a coalition government, so we did have a Prime Minister, the Prime Minister Roundtable, the Speakers Roundtable, Development Partners Roundtable. We have the Chief Justice Roundtable. And again, I'll talk about how all these have come about. And again, with the roundtables and forums with the ministries. But there are different areas that in engaging through these forums where the private sector has played a major role to ensure that the transitions that we've seen to the growth of where the economy is at right now, or where Kenya is as a transition economy democratically is. One was addressing the economic challenges. In 2003, when the country went through the major elections in 2002, and as I mentioned, there was an opposition coalition took over, the government launched what was called the Economic Recovery Strategy for Wealth and Employment Creation. It's at that point that the government actually approached the private sector and challenged them and said, we are going to be implementing an economic recovery strategy. We cannot do this without the unorganized private sector. And that's when the private sector, very much fragmented, like the political parties then, came together and formed what is today the Alliance, the Kenya Private Sector Alliance, where the different associations come together and partner with government on economic growth. The economic recovery strategy focused on about 6 areas, and I'll name 5 of those areas: reforming the state and its operations so that good governance could prevail under democracy, improving the physical and social infrastructure, and it's the reason why today Kenya is becoming the hub for East Africa and Africa as a whole, as general for many businesses because of the growth in infrastructure and social infrastructure. Reviving economic institutions. A lot of the government-owned enterprises were moribund, and it was during this process that a lot of them got revived. Pro-growth policies. The private sector really did engage government in a lot of the pro-growth policies, the ICT policy. Today, when we talk about ICT in Kenya, and the whole world knows about the M-Pesas and the derivatives of the M-Pesa, a lot of them came about because of this focus. It was the private sector that actually requested the government to form the Ministry of ICT and Information, Communication and Technology Ministry. And it's from that we have seen a lot of growth in that area. The Media Act, the free media. We did not have a free media. We had one media, and the media was not free in Kenya. But today, I think we do have one of the most free media in the world. Other acts and policies that have come to pass, some taking as long as 10 years, the micro and small enterprise, the informal sector that contributes to 70% of employment in the country, but only contributes about 17 to 20% of the GDP. Again, that took long, but the process began then, 10 years ago. Free primary education. When you talk to a lot of investors in Kenya and you ask them, why do you look at Kenya as your base when you're looking at Africa? A lot of them will tell you it's because of the human resource capital. It's one of the most developed in Africa. And that's one of the reasons a lot of those companies would do that. And so for that reason, the KEPSA worked closely with government. And at the end of 5 years, this strategy was deemed very successful, and the economy was growing at about 6 to 7%. And then came the Vision 2030. In June 2008, once the economic recovery strategy was fully implemented, the government again, together with other stakeholders and private sector playing a key role, did launched the Kenya Vision 2030 and the first medium-term plan to provide continuity to the economic recovery strategy. Again, KEPSA consulted and became part of the vision and has continued in the implementation. This year, the government just launched the medium-term plan 2, again after successfully implementing the medium-term plan 1. As the country journeys to Vision 2030, which is really the intention is to make Kenya one of the most industrialized countries in middle-income countries by 2030. But even beyond that, I think we've been talking about middle income, but there's again a different discussion saying, why should we just focus on middle income? That's a short-term goal. I think we should be thinking bigger, that we can be an industrialized country by 2030. Other countries have done it. Malaysia had a Vision 2020 and actually achieved it before 20 years were over. So it's possible for Kenya to do the same. And for the journey that we're walking today, I think it's not impossible. But as KEPSA has continued to implement and with this vision with government, one of the things that we have realized is that the youth are a bedrock of this vision, and that out of the unemployment rate, the youth double the adult unemployment of about 21%. And so for that reason, KEPSA and the government and the World Bank did come together and start a program, a pilot program titled Kenya Youth Empowerment Program. And this was to say, what does the youth need? A lot of the youth who leave college at times are unemployed. Others do not get to college, but yet after high school need a meaningful employment or something to do. And so this program really focuses on co-entrepreneurship and training and internship, because the private sector is really the engine of economic growth and the jobs are in the private sector. And so out of the 10,000 target for 4 years, this first we're in the third year, and 9,000 youth have already gone through the process and the program. And 70% of these interns have either been employed, have started own businesses, or have gone back to school. And so again, this is one of the most successful youth programs in the country. KEPSA has also continued to contribute to other policies during this implementation of Vision 2030, the Public-Private Partnership Act, the land policy, the trade and industrialization policies. A lot of these all, again, are pro-growth. We're looking at all the big infrastructure projects. This the government cannot do alone. And so the need for a good act on public-private partnerships so that the private sector can again engage not only in the policy making, but also in actual investments. As we go into the natural resources, there's a need for a good policy to govern our mining sector. Some of the countries in Africa have not had successful stories because of the natural resources they have, Congo and others, and we do not want to walk that journey. And so for that reason, we are really embarking on working on a policy that will govern our resources and benefit the local as well as the investors. Well, the Vision 2030 was being developed. One of the other strategies that was developed was the private sector development strategy, whose main objective was to set out a roadmap to help the country build a strong, thriving private sector through structures to be created by the government to promote private sector growth and development. Again, KEPSA took a major role and provided technical guidance in the implementation of the PSDS. And this was also a continuation of what the ERS had done, but a real focus on the private sector. But yet, when all this was going on in the economic side and economic reforms, and a lot of economic reform policies were being established, there were other challenges that the country was facing. Some of them governance, and some of them democratic. And I'd mentioned about the post-election violence in 2008. When this happened, the private sector, among the other sectors, were heavily affected. And up to today, I don't think we've ever calculated what the loss to the private sector was after that election, but it went to millions of shillings. And at that point, it didn't look like there was a way forward. And so different sectoral levels started coming up with different efforts to see how to manage the post-election violence. But again, after some time, there was not much traction. And so again, the sectoral organizations came together under the umbrella of KEPSA and mounted a spirited campaign towards finding a solution to the crisis. And so KEPSA, in partnership with a panel of eminent African personalities under the leadership of Dr. Kofi Annan, helped mediate between the two warring political factions, which was the Party of National Union and the Orange Democratic Movement, which resulted to a coalition government and grand coalition government, which we had for the last 5 years. This also opened a new opportunity for the private sector. I mentioned that the private sector, KEPSA, engages government through the roundtables and the forums. We did, apart from engaging directly with ministries, we did not have regular engagement with the president and now the prime minister and the speaker. But this is where the opportunities arose. And because of that mediation process, the three main leaders of the country asked that we could continue to engage with them, not only on economic issues, but also governance issues. And so after the coalition government was formed, KEPSA started engaging government and other stakeholders in the development of the Constitution. I mentioned about the Constitution 2010, and it was during that process that KEPSA actually came together and formed a team that mirrored the team that was with the government and engaged in the whole formulation. And while there were many pushing for a three-tier government, it was the private sector that pushed for a two-tier government with the issue of it would be so expensive to fund a three-tier government. Already we're seeing the challenges of funding a two-tier government, the cost of devolution, and yet most other sectors were pushing for a three-tier government. So we felt that was one of the success of the private sector engaging in the formulation of the Constitution, but also a lot of input in what was the economic pillar. The Constitution has 3 pillars. There's the social pillar, which is also reflected in the Vision 2030. There's also there's a lot on the political and economic pillar, and the private sector really contributed in the economic pillar. And we continue to engage with the parliament, with ministries, and especially on what we call the constitutional bills. There are several stages to implementing the Constitution, and it will take us a long time. But over the years, since 2010, we've been engaging, especially with Parliament, on constitutional bills and working with other partners to really ensure that the private sector voice is heard and included in those bills. But towards 2011, again, we're approaching another election, and a discussion began in private sector. Should we wait and see what would happen in 2012? Initially, the elections was to be in 2012, but ended up in 2013. Or should we be proactive and prevent another occasion of 2008? And at that point, the leaders in private sector, again under the umbrella of KEPSA, decided that we should not wait. Let's be more proactive and do something. And we started a campaign, pretty much what would be the arena of the civil society. But we felt that the private sector in Africa and in many developing countries cannot only focus on economic issues, but also on governance issues. So we began a campaign that we dubbed Kenya Daima, meaning I'm a Kenyan forever. This is my country. Whatever happens, it will affect me, it will affect my family, it will affect my investments. And we decided to partner with others, just as we had done in 2008 in mitigating the chaos that had happened in 2008. And so we partnered with civil society, the faith-based organizations, the media, and development partners, and spearheaded the campaign. This campaign led to over 200 initiatives and inspired many others. For example, the first presidential debates in Kenya and in Africa that were covered world over. And I hope some of you may have watched that. This was part of the inspiration from that campaign. The campaign therefore contributed greatly to the peaceful elections, and we've continued to ensure business continuity during that process and going forward. In conclusion, let me say that the private sector has sought positively shape to shape the country's transition. And let me give another example. For those who may have watched the media, about 3 weeks ago, we had a terrorist attack, the second major terrorist attack in Kenya, and this time it was on a mall, in a mall, a shopping mall, a very vibrant mall. The private sector was affected like every other, any other sector. But even though we strongly assess and feel that this will not have a major impact in the economy, it does change perceptions, and it's the perceptions that could affect the economy than the real effect from the mall. And so what KEPSA is doing again, apart from engaging with government on security issues to look at how do we prevent such from happening in future, what we are also doing is partnering with, we had a reach out from the New York team that really worked to bring vibrancy again in New York after 9/11. And they're really working with KEPSA again to say, how do we bring back vibrancy? How do you ensure that investor confidence is not lost while these issues are being addressed? And so again, the private sector stepping in and saying, we have a role to play, not only to ensure that business continues, but also that the country continues to be the leader in Africa. And so how are we doing? How are we continuing to do this, even as we mitigate issues and things and challenges that come by? We do have a national business agenda, 2013 and 2018, and that is going to continue to guide us. And it looks at about 10 areas, improving the regulatory environment. We've had great successes in the last 10 years working with government to improve the regulatory environment. Today, as I was mentioning to someone earlier, I almost have a business delegation every week or every 2 weeks from different parts of the country looking for opportunities in Kenya. And it's because of the improvement of the regulatory environment. Improving security. Yes, we may not do everything now with the light of Somalia, but we know we worked very closely with government to encourage government to say, so we have to do something about Somalia. Business was coming to a standstill in the coastal region where our tourism sector is most vibrant. And so even as Somalia continues and the threats continue, we are working to mitigate those threats. Improving governance. We've worked during the different political transitions. The private sector has remained vibrant, active, sometimes late, like in 2008, but again, active and offering solutions. And so we'll continue to be that. Infrastructure development, we want to make Kenya the most competitive country in Africa and beyond. And so the need to continue to develop our infrastructure is important. The development of micro, small, and medium enterprise, I just talked about that it employs at least 70% of Kenyan population. So the need to keep developing this, to promote it, to growing it. One of my favorite statements is that the micro enterprise of today is the Microsoft of tomorrow. And so they need to always think of themselves as the big corporation of tomorrow. The natural resource management, every time, the last 2 years, there's been rediscovery of oil and gas, different minerals, and now some of those parts have discoveries of large amounts of water. How do we manage and harness those resources? Improving trade and investment. Today, African trade, intra-Africa trade is only 12%. Intra-America, inter-Europe trade is about 40%. We are a far way to go. And so we have to improve and grow our trade and investment. An increase of 1% of intra-Africa trade would see countries like Kenya reduce, almost go without a need for foreign aid. And so the need for us to get it to at least even 30%, if not 40% and 60% like other countries. Reinvesting in human capital development. The world is changing. There's global trends every time. And so even though we may have a good human resource capital for Africa, we're not about Africa. We're about the global village. It's about the global world. And so we have to keep reinvesting on that and promoting a culture of high performance. And so for that reason, KEPSA will continue to play its role in contributing to economic development in Kenya and engage with all stakeholders, the international community and all the other stakeholders to ensure that as government goes through transitions, as the country goes through transitions, that we play a rightful role as the private sector. Amid some challenges, Kenya is on the right track to sustained economic reforms and economic prosperity. Thank you very much.
Well, thank you, Carole, for a wonderfully detailed and comprehensive view of your work and the course of the country and what KEPSA is doing in the private sector more generally. As I was listening, I was jotting down some questions. I think I have about 10 of them, and I will not monopolize my position on the stage. But I'd like to kick things off. What I think is interesting about the story that you're telling is it's compelling as a Kenyan story, and it's compelling as an African story. Uh, in 2001, which is not terribly long ago, I think most people in this room and most observers of Africa had thought of Kenya as a straggler at best. If it was not written off entirely, it was a country that was mired in corruption, authoritarian holdover, slow progress toward transition, ethnic violence, and so forth, and deep inequalities and poverty. And the last decade's growth and dynamism has been remarkable for a number of reasons, but one of them that I think is especially noteworthy is that Kenya at present is not a country that's grown rich through natural resource wealth. Natural resource wealth obviously is a hazard as much as an opportunity, but what's interesting in the narratives of Africa rising and the upward trajectory of African economies is that many skeptics have said this is simply a commodity supercycle. And Kenya is contrary evidence to that because resources were not in the picture, but rather the sectors that you talk about, agriculture having its ups and downs, but ICT, finance, tourism, and a number of others. So that's a particularly interesting story, that trajectory. The other, I think, interesting thing about the story that you're telling is I cast about in my mind for another example that I can think of where the private sector was well organized and clearly and closely engaged with government throughout a transition process. And I confess that I can't think of another example. Not South Africa, where there's a historical divide between the business sector and the ANC coalition, which is well known. Not Ghana, where there's a strong private sector voice, but they're allied to a particular political party. Yeah. Not Nigeria, where there's been a consultative mechanism, but no real uptake, if you will, or reciprocity from the government side. So it's particularly interesting to see the process that you have pushed forward and that you're involved in. And so I guess I want to ask two questions and really kick this off by moving to a question. One question is, have you experienced an evolution or a process in terms of interest and engagement from the government side? Was there initial reluctance? Were they immediately enthusiastic? Have both sides gotten better in sectoral consultative mechanisms and really drilling down and homing in on the key problems? So that's one question. How has that, can you say a little bit about that process? The other strategic question that caught my interest was the reference to Malaysia. Now the comparisons between Kenya and Malaysia are quite apt in many respects, and indeed a comparative research project in the Netherlands tracking development has paired Malaysia and Kenya as a paired comparison. What was distinctive in Malaysia, and I wonder if you could reflect on it from the Kenyan perspective, is they had a very successful and aggressive agricultural policy involving land reform, involving investment and technology and inputs. They had a clear industrial policy, and manufacturing didn't figure much in your narrative, so I'd like to hear about that. And they had an equity or redistribution policy. So not to talk about the Malaysian experience so much, but these key elements in Kenya, how do they play into the vision of KEPSA and the discussions that you've been having?
Okay, thank you.
Two short questions.
Yeah, no, thank you very much. It's true. I think Kenya right now, and I think after what has happened in Egypt, that needs to be relooked. But it's the second largest economy in Africa, non-resource, after Egypt, and fifth largest economy in Africa when you bring the resource countries. And so it's true, it hasn't relied on natural resources to grow. But I think that has also brought some interesting opportunities. the focus on ICT, the financial services, human resource development, and in terms of even of export of human resource. And we have a big diaspora, not only in this country, but in places you'd never imagine there would be diaspora. But Kenya does have diaspora in very interesting countries. And with that also brought the interest of the government wanting to work very closely with the private sector, because we were not depending on commodities, it was services. And initially, it was strange bedfellows. And so the government sat on one side and private sector sat on one side, and you are always very suspicious of each other. But I think the turning point was in 2003, when the government embarked on an economic recovery and realized it could not do that without the private sector. And so when it formulated the economic recovery strategy and invited the private sector to the table, that changed everything. And that has continued to grow. That today, the relationship is a totally different relationship. That government will go out to look for trade and investment, even to other countries, and go with the private sector. We never had that. Today, government will be formulating, even before private sector says would like to be part of these policies. I do get invited by government, both in parliament and executive, and say, can private sector comment on this policy? Can private sector comment on these bills? So it's a very different relationship. We are still very distinct. There's government and there's private sector, but we do know our meeting point when things do happen. When the whole election process began, we met a lot with government just to look at election preparedness. That's something that, what we kept saying is that political stability is a major production factor for private sector. If a company is thinking about locating into a country, that becomes a major consideration. And so we did work with the security agencies to really monitor. And by the time elections by the time we're approaching elections, one of the things you may have noticed, something that never changed and had changed for the last 20 years, for the last 5 elections we'd had in 20 years, was the Nairobi Stock Exchange. The stock market for the first time never dropped. And it's because of the engagement of the private sector with the security agencies, with the election agencies, and there was a total confidence that this time it will go right. And so a lot of business did not slow down, and that was a part of that engagement. And so the engagement, the interest by government, the interest by private sector has continued to grow over the years. When you talk about Malaysia, it's true there are a lot of comparisons between Malaysia. One of the things that we keep saying is that Malaysia, the Kenyan economy in Malaysia in the 1960s was at par. Today we are at different levels. It's because Malaysia took a lot of the policies of Kenya and implemented them. We still had them on our shelves. So what we've done is go back to those shelves and pick those policies and start implementing. Agriculture currently, one of the things that this government is doing, apart from agribusiness and agro-production, they have set aside one of the key things they're going to do to increase food security in the country is 1 million acres of land on irrigation. That is going to be a change. It's going to change the whole aspect and feed even our neighbors. And so there's a real focus on agriculture as a big policy. And if you look at countries like Malaysia and others who were at the same level in the 60s and say, what did they do that we did not do? They implemented the policies. We had very similar policies. Many times they led delegations to our country. Yep. Kenya actually offered foreign aid to Malaysia in the 60s. It's an interesting story when you look at Malaysia and Kenya and even Thailand and Singapore, who were a lending of a country of foreign aid in the 60s. What went wrong? And a lot of it had to do with our politics. And so we are looking back at that and said, our policies were not wrong. We just never implemented them. Maybe just to finalize on the manufacturing sector. I think our manufacturing sector is growing. I didn't mention it as the top 5 because we have the other sectors are much bigger. But now with the East African community, it's it's the largest, the fastest growing economic bloc in Africa, the East African community. And so that we see with about 140 million consumers that the manufacturing sector, will continue to grow in the process.
Yeah, it's generally known in West Africa that Malaysia came asking for rubber cuttings,
Yes.
rubber plant cuttings in the 1950s, and the West Africans were happy to part with them because they thought, well,
Yeah.
we're phasing this out, we're moving
Yeah.
to manufacturing. What are they going to do with it? And now all the not rubber, pardon me, palm oil. Sorry, pardon
Palm
me,
oil.
palm oil.
Yeah.
And now all the palm oil that one can find in West Africa is from Malaysia.
Malaysia.
So that's
Yeah.
it's an irony. Anyway, let's open this up. I'm sure there are many questions, and we'll take groups of 2 or 3 questions, and then Carole will answer them. Why don't we start here? Please identify yourself, and Joel. And then I'll get to you and you. I see.
You know, there are 2 things that I thought you missed in this success story. One is your own generation, what Steve Rattler has called the cheetah generation. So you deserve to pat yourself on the back. And the other is financial services, which is a derivative of ICT, but is really quite spectacular in terms of its penetrating the region. Now let me turn to my question. You mentioned governance quite a lot. But you didn't really mention or focus on inequality. And there are 2 types of inequality. One, of course, is across income groups. The other is across different regions of the country. Over half of the Kenyan economy is in the Nairobi area, which is one of the reasons of the traffic congestion. But then you drop off into areas that have been left behind. And sadly, that also coincides with where the various major ethnic groups, which have been the fault line of Kenyan politics, resides. So what I'd like you to talk about a little bit is how is the business community addressing this issue, or what is its visions for addressing the interregional inequalities? And parallel to that, what is the business community's views on devolution, which arguably offer a way out of this, and yet in terms of getting that up and running, it's going to be a very daunting challenge, as we've seen in the initial few months. Thanks.
Okay, great. And then I had right there.
Hi, I'm Mustansir Barma. I'm a political economist based out of Nairobi, affiliated with the American Chamber of Commerce. Thank you for that presentation. You highlighted a lot of the opportunities that the private sector has and a lot of their successes. And I was wondering if you could maybe focus a little bit on the challenges that are remaining that the private sector faces, especially what your many members have been telling you. Thank you.
Okay, and then in this group, this will be ours. Sorry, Melissa, making you.
Good afternoon. Thank you very much, Ms. Kariuki. It's a pleasure to have you here. My name is Betsy Graves. I'm with the Whitaker Group, and my question pertains to regional infrastructure. I know that Kenya is a major player in things like the Lapset corridor, as well as some of the proposed highway corridors connecting things like to Uganda and Rwanda. I know particularly with Lapset, there's a lot of opportunity for areas along that corridor to grow and develop in various ways. So I'd be interested to hear your perspective and with the private sector in Kenya, with engagement on these regional infrastructure projects. Thank you very much.
Great. Okay, we'll leave you with those 3.
Thank you. Good questions. That's true. The cheetah generation, I think that's a good way to look at it. And I think that's one of the generations that has changed. And it's a generation that grew up in very tough economic times. And so for that reason, became a very innovative, very entrepreneur generation, because we had to learn and to find ways to survive. But also it was also at a good time when the world and the global economy was opening up to the world. So there was a lot of, this generation has traveled a lot, has worked in many countries, and so has really supported what's happening at home, either by coming back or even by being away. So it's a generation that has really affected and impacted a lot on what's happening in the country. And again, yes, financial services, when I talked about telecommunications, I should have mentioned that financial services, and the reason financial services have grown that fast is because of the support of the ICT services, in terms of all the innovations that are coming out of the ICT sector and supporting that service. Kenya is a small country, but has about 45 banks, both local and international banks, all in one small country. And it's because it's served very well. The regulations, the financial regulations are very conducive. Secondly, because of Kenya becoming more of a hub of other industries, so the financial services have a big market. But thirdly, it's because of all the innovations that are happening around ICT that support financial services that has really grown that sector. When you talk about inequality, yes, as the economy has grown, so has the inequality gap. And I think at some point, Kenya was the third, I think out of the 10 largest unequal societies, I think it was the top 3 or top 4. And so that's really a problem. And we've seen that in terms of how it has affected security by raising insecurity because of joblessness and unemployment. But I think together, and let me talk about government and also and private sector, but government has worked to find different ways to mitigate that. First, by coming up with economic stimulus programs, like the youth fund, the women fund, the micro enterprise funds, just different funds to stimulate those sectors that are most affected to start reducing this inequality. Again, also even with school, with the free education, again, that was supposed to ensure that no child was left behind because they could not afford school fees. The new government has come up with a free maternity for all women, again, to reduce child mortality, to just ensure that there's survival. Because when you lose a mother, the whole family structure is affected, and the chances of them falling back to poverty is so much higher. And so there are a lot of different programs that the government tries to initiate. But again, the devolution process, this is supposed to also start really majorly reduce that gap, because then in terms of development, it's not only around the politics of the day and who is in power for the day, so that these 47 counties, as they are right now, to look at both their own investments, their own growth, and get support by the national government. And so that I think in the next 5-10 years, we should be able to see a lot more difference than we have seen in terms of inequality. For business, I think we look at devolution as a major opportunity for investment. The reason a lot of business will locate in Nairobi is for services. But if these services are now available in the counties, then there's no need of businesses settling in Nairobi. And again, as they locate into the counties, then more employment, more jobs creation, and more wealth in those counties, as we see. Again, it's very interesting. The recent discoveries of the different minerals are in the most remote of the places in the country, the northeastern, the coastal region. And so harnessing that wealth will also grow those areas that for a long time have been left behind in terms of growth. In terms of our challenges that business faces, one, apart from security, which I mentioned, and again, this is a work in progress to really secure our borders, even as we work around to secure our borders. Secondly, to continue to work to get Somalia to be more stable, because an unstable Somalia will mean insecurity in Kenya for a long time. And also we did a lot of work with Sudan, and as Sudan has stabilized, we've seen less insecurity from that side. And so it's important for us to continue to work on Somalia. But the other major cost that business faces today, and which is also a great opportunity, is energy costs. The energy costs in Kenya are very high, and so we've seen business struggle with that. But yet we have a lot of resources. Kenya has the largest deposit of geothermal, 7,000 megawatts in Africa. And those are hardly exploited. I don't think even we've done the first 1,000, maybe almost 800 now. And so there's a lot of opportunity there. There's a lot of solar. There's a lot of wind energy. We have coal deposits now. And so this should start changing, but this has remained a major cost of doing business in Kenya. I think the other one is just the port of Mombasa. We talk of Kenya being a hub. The port has been a major challenge, but again, a lot of work has gone into that. And in the last 6 months, we've not had any complaints from business about the port of Mombasa. There's a lot of automation that has gone in, and Uganda business and Rwanda and Burundi, who depend on that port, at least now there's a lot of movement. And now the work that is remaining is along the northern corridor, the movement of goods from Mombasa port to all the way to to Kampala and to Kigali and to Burundi and to Congo. That is really where the work is in terms of just improving the infrastructure and dealing with the transaction costs along the corridor. The other work that has been a major cost for business is really just not having a well-established e-government. A lot of work is being done there. Now the company registry is all automated. There's a lot of work on the land registry to be automated, and that's going on well. So automating all the different government systems, I think, will really reduce the cost of doing business. So those are some of the major costs that business complains about in terms of doing business in Kenya. On regional infrastructure, yes, LAPSET offers great opportunities. It's actually the largest infrastructure project post-colonial Africa. And so this is really a major project. It has the Lamu port, the road that connects Ethiopia and Sudan from Lamu, the rail, again connecting those countries, the oil pipeline, and also at an airport at Isiolo. And if you look at the map of Kenya, Isiolo is really the central, really where the capital should be of Kenya, because it's the central location. And so it offers a lot of opportunity for private sector to be involved in the projects. And so we were looking at that and really looking at the different projects that are available for private sector, but looking at how that will open up. And again, it's the right time. That is the side where we are discovering all the different resources, the water, the oil, and the gas. And so the deposits are most on that side, and all the other different minerals. So this really opens a great opportunity for that part of the world. Yeah, I hope all answered.
Okay, yeah, those three. I see one right back there, yeah, in the aisle. Then we can work forward.
My name is Charles Mangongera. I'm one of the fellows here at NED, and I'm from Zimbabwe. So I know that there are a lot of parallels that we can draw between our two countries, from the post-colonial predatory politics to the violence, to the possibilities of a transition, and the fact that we just had an election in both countries. My question is, to what extent has the election that we just saw provided opportunities for a sustainable breakthrough, democratic breakthrough in Kenya? I'm asking this question because there are still some elements of fragility that I see, and if I'm wrong, please correct me. The fact that we still have the ICC charges, against the president and the vice president, and also the fact that yes, we didn't have violence in this election, but maybe we didn't have, and that's my take, and if I'm wrong again, please correct me. We didn't have violence not because we have effectively dealt with the ingredients that would cause the violence, but because we didn't want to see the kind of violence that we saw in 2008. So to what extent have we witnessed a stable transition in Kenya?
That's great. Yeah, there.
Thank you. Lawrence Freeman from the Africa Desk at ER Magazine. I've been studying African economies for many years. And I think one thing I would like to counterpose is some of your remarks to a presentation that was made a couple of weeks ago at SAIS Africa at 50 on the economy of Kenya. Because I think you will be running into a mistake if you base the future of the economy on the banking sector, finance sector, et cetera, because actually that sector is the weakest sector in the world right now in the system. And what was presented at that conference a few weeks ago was that the agricultural portion of the GDP has declined since independence, from what, 43 to 38. The only thing, and manufacturing has remained the same at 10%, and the only thing that's gone up is the service banking industry from about 38 to 55. So that poses a real problem. If you want to have stability in Kenya, you have to provide for the people. And that means food, energy, power, transportation. That's not going to be provided by the financial sector. So the question is these statistics that this woman presented from the Africa Growth Initiative down the block here in Washington, if that's true, then you would have to change what you've been saying to actually make investments in these areas. And what she points out in her paper, and also it applies to the Malaysian model that Peter mentioned, is that the government was investing in agriculture, there was an improvement. When the government turned it over to the liberalization policy, agriculture declined in Kenya. And one thing Malaysia did is they had government investment in agriculture. So it seems to me that these policy that you're orienting here would have to focus on the real positive sectors of the economy, and it would have to be involvement of the government, because in the course that you're going now, if these statistics are right, it's not going to really help the people and provide stability.
So a question about government structure. Okay, economic structure. Is there another question? Yeah, we'll go here. This will be our third.
Hi, Carol.
Hi.
Lars Benson, Center for International Private Enterprise. I'd like to take you back to devolution again. And you've talked about some of the promises of devolution, opportunities for investment, but there's also a lot of talk about the dangers in terms of the risk that a lot of these counties will create uncompetitive environments, raise taxes on the private sector and make it potentially flee. And so what are you doing, or what is KEPSA doing, and what are Kenyans doing to mitigate this, as well as getting involved in what is pretty much the budget process as these counties are coming into existence? They have a lot of people who are talking, or the parliamentarians from the papers I read were talking about raising their salaries again, which seems to be a story that repeats itself in Kenya at the county level, but they weren't really talking or seem to have the skills in terms of developing the budgets and really engaging with the private sector on that issue. Thank you.
Great. Okay.
Okay. Okay, the first one from Charles on the 2013 elections and stability. I think the country is on a growth path. I don't think we are there, and there's a lot of issues to keep dealing and working on, and unifying the country. I think what the current government is doing is really to work on unifying the country. And one of the ways is to see that services are being delivered to people, their economic opportunities and employment. And so really looking at those kind of policies and opportunities. One of the new funds that was just launched by the current government at the beginning of about 2 months ago is what they call the Ways of Fund. Again, really targeting the youth and the women. There's a new law that allows 30% of public procurement to go to women and youth. Again, really, this is just things to start getting the people to have a livelihood, because this is how you just really build a country's stability. The issues of instability, I think, will continue to be discussed. What the good thing is that no one is hiding from them, and there's a lot of discussion of what do we do, how do we deal with as issues emerge, and also looking at there are things that you cannot change from the past, but how do you move on from here? ICC, I think from the private sector angle, is not a consideration. It's not a factor that private sector considers. I've not had any investor coming in and saying, of all the factors I'm considering of investment, ICC in the list. So it's not a factor that is coming up in terms of investment, but it's a political discussion that is going on, but not in the private sector. So I don't know if I've answered fully your question. On the issue of really looking at what's driving the economy and looking at the financial sector vis-a-vis agriculture and others, I think what we're seeing is that the financial sector has been, yes, it should not be what grows the economy and sustains the economy, because it's very unstable, but it's been growing over the years in the country and in the region, maybe more than the other areas, and driven a lot because of the other factors. Industries setting base in the region, the ICT support, again, and just the regulatory framework. But I don't think it's it's the sector that the country is banking its growth on. It's seen as a support sector to what it is. And the reason why I talked about revitalization of agriculture, there's real focus to revitalize agriculture. We've gone into, for the last, even some of the economic stimulus programs that were done by the former government included agricultural program like fish farming, something that was not a key focus before, where fish was in the lake and in the sea, but now we have a lot of fish farming in the country, looking at greenhousing, and all that, and saying, how do we ensure that we increase even our export production of horticulture? One of our biggest markets for horticulture is Europe. And so really targeting that market and other markets with the horticulture, the Middle East and other countries. So there's a big focus on revitalizing agriculture, making the inputs affordable, and really incentivizing that sector so that even the youth, as we're looking talking about the youth and jobs, how do we get the youth to go into agriculture? What do they need? We're talking about our technological youth. So what kind of technology do we need? And we're starting to see even applications by this same youth developing for agriculture, where farmers can now use applications to monitor the weather or to and their production and all that. And so there's a lot of focus on agriculture because it's still seen as a mainstay for most Kenyans and also a real sector for growth for the region. Then also the other focus of other sectors, as I mentioned, tourism and transport as the key drivers of the economy right now. And tourism has continued to grow, but I think there's so much more to do. And that's why for us, I think even in the private sector, to continue driving the message of stability is very important, because tourism is a very different kind of investment. It's a leisure investment. So I'll only go where I feel secure. It's not so much that I've already put an establishment of $20 million, so I have to stay. With tourism, I can decide or not decide to move around. And so there's a lot of focus to really create the enabling environment for tourism, especially. And part of Somalia, one of the things that drove Kenya to Somalia was that, because we were losing so much from tourism because of just the insecurity because of Somalia. Large risks with devolution, yes. Where there are opportunities, there are risks. And yes, there are many risks with devolution. One of the major challenges that actually we've had with the devolution is the cost of devolution. It's something that was discussed, but it was seen that, of course, even as we talked about the constitution, the gains of devolution were more than the risks or the losses of devolution. And yes, cost of devolution is high, and the government is really incurring a lot of huge public debt to devolution, but we hope as investments get into these areas that this will be mitigated. What are we doing with the private sector? It's encouraging the private sector to go into the counties. We've had a lot of interest, even from foreign investors who study Africa and Kenya and come and say, and I'll give the case of Malaysia again. I had a delegation from Malaysia that had already mapped where they could do palm oil in Kenya. And so they came with saying, we know this area, can we get in touch with the governor of Kakamega, because this is where we'd like to do palm oil. So we're starting to see interest even by other countries, not just looking at Kenya, but also looking at counties where they would like to locate their businesses. But what we're really doing from the private sector side is looking at the county bills. Each county now is coming out with a county bill that is talking about how they will invest, how they will tax, and all that. And some of them have been very interesting. And I'll give an example of one of the county bills we were looking at last week, and that's the county of Nakuru. And they had a count where they had looked at all the bylaws that were originally with the local councils that had never been implemented, including the how much, if you own a donkey, how much you have to pay per day. And they were going to put all that again now in the county. And when you looked at that for business, it was going to be impossible. But they were not going out of, and they were not doing anything outrageous. They were just bringing in back things that had never been implemented. But we are going back to them and saying, this will kill business. Look at ways that you attract business and investors. And so already we have worked with some of our members, have already engaged some of these counties. We as KEPSA bringing together the private sector, we've done that with Nairobi, and we'll be going from county to county, especially picking up the major counties of investments and really discussing the bills they're coming up with and how they're going to raise their revenue. Some of them are proactive, like Machakos. Instead of looking at how they're going to tax, they've started holding investor forums and investor conferences to attract businesses. And they've done considerably well in terms of that. And so I think the competition within counties will also help that those that are sitting back and thinking of taxation will lag behind and will have to change their model when they see those that are looking at investments and attracting investors. So that's really what we hope to see. And we can only tell in the next 3-4 years really how these things will span out, because it's a real new model. No, we're just treading in foreign waters, but as we're working through it as we go along. And we're happy to work with countries that have walked this journey. It's a very different system. It's not a federal system. It's a devolved system. So some services have been devolved to the counties. Some remain with the national government. And again, understanding that is very hard to say what is really supposed to be for the county government, what has remained with the national government. And so it's a tricky balance, but I think we're walking that journey slowly, both at the political level and even at economic level. So the president and the governors are permanently meeting or discussing and just really finding ways to work together. And we're also doing the same at the business level, starting those discussions to see how do we work with the governors? How can we ensure what we've done at the national level as KEPSA, we can take it down to the counties, so that there'll be the same benefits as we've had at the national level.
You know, you have a convening and informational capability also. I was having a conversation yesterday with some people who were talking about competition among units in federal systems. And that can be a very fruitful kind of competition. But the point was made, which was very interesting to me, that very often contiguous states and regions don't know what's happening next door, and governors or premiers don't speak to each other. And so if associations or agencies can convene these leaders and broadcast what's happening in various areas, that can generate a kind of demonstration effect and a kind of fruitful dynamic.
Let me just say, even just to give an example of some of the counties, I know there are like 3-4 counties who've come together and they've established a dairy manufacturing plant. You know, so that is very proactive, where 2-3 counties say, instead of each of us, we all have dairy as our mainstay in our counties. Instead of having a plant in each of our counties, why don't we come together and establish one? And so these are interesting things that are coming up, and we're just going to start seeing what that will lead in as we go along.
Yeah, see, question there.
Hi, my name is Josh Linden. I work at Democracy International. Thanks for being here. I actually have 2 questions. I'll try to make both of them very quick. My first deals with inequality, which you talked about briefly, specifically as it relates to infrastructure. One of the concerns that I've heard is that infrastructure projects don't really take into account the needs of local communities as much as they need to. Specifically in the area of Lamu and the new port and the pipeline, there's a lot of fear that it's going to disrupt communities and livelihoods for the benefit of people living very far away. So if you could talk about how the business community sort of thinks about these issues and having these big projects also impact in a positive way local communities and populations, that'd be great. My second question actually deals with elections, so it's a little bit of a different topic. I believe it was Safaricom that was involved with the reporting of election results back in March. And my impression was actually that there were a number of problems with that process. But it's the idea of using telecommunication companies as a partner in elections is sort of an interesting idea that's going on in a lot of different countries around the world. So if you could talk about whether or not businesses and investors see this as an opportunity for partnership with the government in a positive way, that they see as profitable and the government potentially sees as useful for creating more efficient election processes and just making the entire system more credible and legitimate. Thanks.
I don't know if you can bring this forward for Mark, and then we'll get to it back.
Mark Plattner, International Forum. I'm just wondering whether there's any political opposition to this example of cooperation between business and government. Are there other forces in the country that think business has too much influence? If there were to be a political change in terms of the government, would the kind of cooperation that you've had survive?
Great. And I saw one right on the aisle. for making the microphone handlers work today.
Hi, Davinia C. with the State Department. Thank you for your presentation. I wanted to talk about if you could expand on FDI. I mean, unfortunately, Kenya has like less in absolute value and in percentage than anybody in the region except for Burundi, which is, it's two different sides of the coin. And there's the number side, and I was wondering what your private sector community says. Like, what are they hearing when they reach out for FDI? What are they? I mean, Tanzania, Ethiopia, all these have many of the same issues Kenya has, but they're attracting, especially in the case of Rwanda, 3-4 times the amount of, well, way more than that FDI than Kenya is at the moment, even though Kenya's FDI numbers are what they are, since they don't calculate, the government doesn't calculate them. And also talking about one of the stories of Africa Rising is reinvestment, domestic reinvestment. And if you could address what that looks like in Kenya's private sector, how they're reinvesting. A lot of it seems to be going outward, which is amazing. I know South Sudan perspective, lots of Kenya investment there. But yeah, if you could address those two issues, thank you.
Great, thanks.
Okay, again on the inequality and using LAPSET as an example, I think there was a lot of discussion, and at least I was part of a bit of the discussions before the launch of the LAPSET process and the LAPSET project, and involving the communities and discussing. And those are very arid areas in terms of you understand where Lamu is and what's been happening. Really, no infrastructure and livelihoods very remote in terms of access of other services. And there was a lot of talk on how does that affect the communities, will the communities benefit? And one of the things that the former president did in launch of the project was to say one of the things that will be set up is a skills academy in the Lamu area that will start developing the human resource needed in the LAPSET, and so that the local people can start benefiting in terms of jobs. Because the chances are, if you go and put a project of that magnitude in a very remote area, you'd have to bring everyone into that, and the local community will really be disadvantaged. And so that's one of the things that was set up. So I'm hoping with the new government that will continue, and so that the local people can be part of that and gain the employment that they need. But again, I think the local community stands to gain a lot more. Beyond the big infrastructure project, there is a lot of support services and support businesses for the big projects. And this is really where the local community can benefit a lot. And a lot of the community NGOs have been really engaged to make sure that the voice of the local people are being heard, and that the local people are not defranchised when these things are being done. And so there's been a real voice. And even before the launch was done, one of the things that was ensured was that everyone had a title deed, so that you needed to, if a project was going to pass near your land, then you needed to be compensated by government. And so it was not forceful evictions. And so government has really tried to be careful when trying to do that. And you can never get everything right, but at least it's done what it can. And so if you choose to sell your title deed, then it's a choice that you're making. But again, the community NGOs have been very, very vocal in ensuring that the local voice is being heard. For private sector, I think it's not just the major projects in terms of the public-private partnerships, a big act that we really pushed to have, because we felt that the government cannot be able to invest in all these projects alone. And again, we also felt that we did not only want the foreign investors in the projects, but we also wanted the local investors included, because 20, 30 years from now, will we be looking for the Chinese to build the roads, or will we be able to build the roads ourselves? And so it's been very important for us to see how the local private sector is included in a lot of these mega projects, so that there's technology transfer, and also they start benefiting and learning, and they can take up some of these mega projects. So there's a lot focus on the local, either local business or local communities when these projects are being done, and hopefully it will get it right. On government and business opposition, good question. I think it's been beneficial in terms of growth of the economy, but you'll always have some opposition. And I think some of the opposition we've heard is mostly from the civil society, saying that there's too much interaction between business and government. So you hear that, but and again, maybe I cannot see because I'm in business. I'm on the business side, so I'm likely to see the positive side of it and not see the negative side of it. And maybe when you look at the gains over the years, I think it's been much better to have that kind of relationship than before, when in the 80s and 90s, when business survived by patronage, and some of the really undeveloped countries continue to thrive on that. But today, the Kenyan business does not live and survive on patronage, but there's structured engagement, and business does really work. And I was telling someone earlier today that and they asked, how does business in Kenya continue to thrive and work when there's so much political ongoings? But what you realize once you live in Kenya, even as a business, that all that is political noise and doesn't really affect what's happening on the ground. So you can continue to do your business and work no matter what is going on at the political angle. There could be a lot of talk, but really doesn't affect what's going on every day. So if you depend on watching news, you may never invest. But you can watch news and tomorrow wake up and go to work and work like nothing really happened. So we almost call it our soap opera for the evening, because it's just noise. And then the following day, everyone goes back to work. So really the politics don't affect. And when we meet with government, it's never around politics. It's about the economy, about governance issues. It's all technical. So it's a very different kind of engagement in that sense. I think one of the last question I asked on that, on FDI, I could not agree more. I know this is something we have talked about ourselves and said, how come our neighbors who are growing at have a lesser growth than ourselves attract more FDI than Kenya is? And there's a study going on. So I'll not comment much because I also want to see that study and understand why the reason is why FDI, we don't attract as much FDI in Kenya. There could be other reasons than what we see with our neighbors, but it's true. We don't attract as much FDI as our neighbors have, but it's on a growth path. I think one of the largest countries in terms of FDI and Kenya is the US. But we are really looking at what are the real reasons why the neighboring countries are attracting more FDI than Kenya.
And then I think there was a question about domestic reinvestment.
Oh, domestic reinvestment. Yes, there's a lot of domestic reinvestment in the country. You may see that most companies going out, but a lot of the companies that go out to invest in the region have investments in Kenya. If you look at the banks, the Kenya Commercial Bank in the region, its largest base is in Kenya. So while the companies are going out and reinvesting in the neighboring countries, and it's this big push of intra-Africa trade, that beyond trade, it's trade and investment, and with economic blocks, we are part of COMESA, which is a large block all the way from Egypt to Swaziland, and then we are part of the East African community. And so there's a lot of free movement of goods and services within the region. And so Kenya, being an economic hub in the region, has really invested in other countries. But most of what you see invested in those other countries has its hub in Kenya. Hardly I've seen any company that is a Kenyan company existing in other countries and does not have a base or existence in Kenya. So there's a lot of reinvestment in the country as well as outside in the region, just because of the custom union, the common market protocols that exist to allow for these investments.
Well, Carole Kariuki, thank you so much. This has been a wonderfully candid and versatile conversation and presentation. The Kenyan story is, I think it's fair to say, distinctive and very compelling to all of us here, and we will be following to see how things play out. Thank you.
Thank you. Thank you.
It was great. Thanks so much.
Thank you.